The dot-com bubble was like build a useful product and one day you will make money. But the crypto one is upgraded version of it. It's dot-com bubble 2.0, make enough money and one day maybe you will build a useful product. That's absolutely outstanding. That's why there is so many issues regarding exploits, rug pulls and so on that are really threatening new investors to come in. So today I will talk about crypto space, also about the new subject, the new tab I decided to add to Blockrevision's episode, that is Market Outlook, when I focus strictly on what is background in terms of stock market, in terms of uprise potential, and also the downward one. So I hope you find it interesting. If you haven't subscribed to the channel, just click this button right now and let's begin. And let's get to economy view at first, and we are starting off with inflationary aspects. So container shipping rates right now looking like they are definitely about to peak in. We've seen the highest problems back in November of 2021. Right now, the only one shipping rate that has its uprise potential, at least in this criteria, is that Rotterdam to New York line that is pointing that that's the only one way that is really paralyzed by those problems with shipping. It means that that's something that may take off a little burden of that inflationary pressure. For the next one, we have also something that should diminish problems with skyrocketing prices of US houses. Right now we've seen that was a real problem for the customers, the potential buyers of new homes, that this decreasing affordability, and we are right now in the period where the affordability to acquire a new house was at the lowest point, haven't been registered, and that may change in the future as lumber price gets chopped in half amid chill in housing markets. And if we take a notice on how this exactly going on, is that random length lumber futures right now has a repeated trajectory of the one that been seen in the second half or at the turn of May and June. So that's something we need to consider with this. In this case, when we're talking about the possibility of have the prices get eventually lower. Unfortunately, with this inflationary weakening aspects, that might be over for now, as there are other issues regarding especially oil that ekes out another weekly gain, and it's 7th consecutive gain in terms of this asset that has a very strong inflationary impact. And as of the next, Shanghai is easing lockdowns. As some of the, I would say that China is still adhere to this zero COVID policy. However, with this exactly news that they are easing the lockdowns, there is something that may also put a pressure on a further oil prices to surge. Related to the issue, I'd like to claim that some economists, however, finding with China being finally eased of these lockdowns will eventually get us back to this free of supply chain disruptions world. However, that might be still far from truth, as supply chains work like a Jenga tower. Whenever you just removing a fair number of blocks of the whole structure, that everything may fall apart. Whenever you just tell, for example, telling to Russia that we don't allow send computer chips to you, and it usually meets with a reaction from Russia that they don't wanna produce chips either. So that's gonna take many months in order to have that supply chain disruptions to eventually been fully recovered. And I wanted to emphasize that this exactly news isn't something that make us think, oh yeah, right now we are over these problems. That might be still a possible still get worse. And that's another issue that is tightening already been foretold, and also hiking interest rates. Right now we can find that Draghi, the former ECB chef, speaking out that in the European Union, rising inflation is not wholly the sign of overheating, but largely the result of a series of supply shocks. Wages must recover their purchasing power, but without creating a price-wage spiral that would result in turn in even higher interest rates. With this map, we can find that the EU is tackling with a very, very high inflation. There are some of the Baltic countries that already are trying to overcome nearly 50% of inflation rate. So that means that there is still many hikes ahead, and there might be more problems for the economy. However, it looks like the Hawks are winning all the positions, just like the Doves did for many years. Narration is strictly one-sided now. And it obviously comes down to the problem with bond yields. 10-year bond yields right now generating higher yields as the risk of euro area problems is increasing on and on. For Italy, Spain, we still far from the position where we were back in 2012 and 2013, but this situation, this very steep rise of this bond yields is something that may be worrisome, as it may lead to some bankruptcies in the future. So the problems that have already been generated may lead to some serious collapses of and troubles in economies. So there will be a very tough times ahead. Needless to say, Treasury Chef warns that food and energy costs could rise even more. And recently, Yellen again defended her support for Biden's policies last year. Even knowing now how inflation has spiked, I wouldn't do it differently, she said. So there's, I don't know, whenever they claiming that they know what they're doing, I wouldn't rather trust them again. So should we believe that this path that's already been taken by Yellen will lead to soft landing? I don't think so. I'm not really sure. And finally, we'll get into market outlook and starting off with the projections of two major banks of US. JP Morgan is finding US S&P 500 index to end up in a second quarter by 4,400 points. However, Morgan Stanley finds we'll enter eventually a recession. So there is a huge division between those two forces. Which one would be right? We will find out in the nearest future. However, let me know which of the 2 points are you really for. Now is the news for the real contrarian. US non-profitable tech price to sales relative is right now at the level that been seen right back during this global financial crisis in 2008 and 9. So it could lead to a conclusion that the massive appreciation of non-profitable tech might be right behind the corner. And you know that we have this tech stocks to rise up again. We need to have better earnings projections, because earnings right now drives everything. So earnings and valuation right now looks like if the projections of earnings will decline 10%, the fair value of S&P will drop back to 3,124 with these projections being made. So it means that there is still some room for a downside, but I wouldn't really assess it right now, as it's still kind of a bearish projection. Bearish projection that might be led by a stronger dollar. Let's have a look at this ratio. This S&P 500 earnings revisions are negatively correlated to US dollar. So it looks like right now the tendency of rising DXY is putting earnings in trouble. The very important area will be whether we will finally get through this 105 points roof, rather, or rebound and move back lower. And DXY is definitely moved by investors' bearish sentiment that right now is very persisting to that extent that it can't rebound as it was back in 2008 during this the global financial crisis. However, the very similar structure we've seen also in 2010. Back in 2011, we've seen a very abrupt rebound. So I would, in that sentiment aspect, I would strictly compare these situations of right now to those from the possible euro area collapse time back in 2011. So we've just got through a bigger slump, but there is still a chance of recover if we just tackle to get out of this bearish territory. And we're going to crypto outlook, and here we have this promised topic of DeFi problems. Solana challenges poor safety rating from DeFi watchdog. So after this Solana network being halted by kind of a systemic problems, we can find that more and more watchdog are just supervising the structure and finding lots of bugs inside. That's not the new finding, as we had some issues back in 2021 with Solana. So can speed of the network can compensate the security issues? I don't think so. So there is something we need to be aware of when using such, I would say, innovative but also risky networks. Recently, we've been talking about optimist tokens that have been exploited. We can find that Vitek Buterin has received from a hacker kind of 1 million optimism tokens, but that's barely a small percentage of the whole amount of tokens being grabbed. So have this been a white hat hacker that is obliged to help the ecosystems finding issues and bugs to strengthen them in time? We don't know yet. We are awaiting for a new data-related issue. But why do I show you that? Is that many investors are really interested in DeFi space, but by listening to such stories, they are being really pushed off this subject. So in order to restart the new cycle of optimism and growth on the crypto, we do need the most resilient systems that will have a chance to tackle such problems. Ethereum and Bitcoin are hack resistant, but there are so many narration around that whenever you enter the crypto, you will lose all your money. And when people from the street are just finding that headlines, they are really scared of entering the new systems and those innovations at all. So without some of the cybersecurity regulations regarding this sector, I wouldn't find the next wave of investors flocking the system. And that also confirms Janet Yellen that says crypto is a very risky option for retirement savers. So not only in terms of volatility, but also in terms of possible problems that already not been maybe got understood. And we finally got to market mover section. Right here we have had on a Thursday very interesting gauge that has unexpectedly turned out to be bad. Initial jobless claims has risen to that extent that right now we are at 229k level after around 200 been seen back during a previous publication, and that's why there also may fire a stronger, more fierce debate about inflationary pressure, especially with this Friday's gauge being already introduced. Inflation rate in US is definitely getting out of control with this 8.6 gauge level. So food costs surged to 10.1%, and right now the inflation rate in US is the highest since early 80s. That means there is another bigger space to have interest rate hike to get pushed by Federal Reserve. And what does it mean for US indexes? Possibly it's going to result in a downward pressure for now. And right now let's get to trade idea section. And for today, very interesting chart is on gold to US dollar that recently been sold off on the news of a higher than expected inflation rate in US. Right now we are recovering from that drop. However, there is still something like liquidity trap. So the XAU to USD is trying to get the stop losses being set right before this sell-off. So it means that right now there is a kind of a good chance to enter the gold to dollar market. That is very quick, and that's something that may point to a much more fierce battle in this area between bulls and bears. But eventually this news of inflation rate is bearish for gold, at least for now. Because what does it mean? It means that Fed is prone to even higher hikes of interest rates on its next meeting. So in terms of area of a trade, I would set it like that, with a stop loss has been set even down on the levels of this trend line. This trend line that's been set from 15th of March, and there is high chance that will get down around nearly 2%. So for this way, risk-reward ratio is at 4.1 level. This price should stabilize somewhere around here, with a possible peak period right around this 1850. So this stop loss area might be extended to the upside. Area of an entrance, I do find it's not the box. Area of an entrance is like that, limited by 1838 and 1846. So gold recently been suffering from a very low interest from a investment or other investor side, and there might be a great catalyst to speed up its sell off. So remember to manage your risk, put stop losses or alarms right around this area. If the trade won't go in your way, you may get forced to intervene. So that's just the proposition of a trade. If you find it interesting, you might put some bet against gold today. So I leave in you with this. If you found my content interesting, just hit a like button, and we are seeing each other in the next episode. It will be broadcasted tomorrow morning. See you then.